Unbeknown to a lot of people, analytics can actually create some fairly basic cash flow analysis, or at the very least, supplement what you're already doing with your current cash flow tool. And you do that on analytics via our growth rates under the market indices tab. So, for example, if I am using a cash flow tool at the moment, and perhaps it's telling me that over the coming years, I should be able to achieve at least 5% with my investment solution. Over on the market indices tab, just to make sure there's some correlation with what you're showing on analytics and what you're showing on your cash flow tool, under the indices tab, if you scroll down to Financial Express, and you'll get these growth rates appear. So select the 5% growth rate there, click on add, and I want to compare that with the investment solution I'm either recommending or perhaps what my client already has. So open up the portfolio tab, go and find the model portfolio, for example, that we want to use, add that in, and over on the right hand side, I just simply want to create maybe a 5-year performance graph and click on generate. And that will neatly show my client that your cash flow tool is telling us we should be able to achieve 5%. And one of the many reasons we're either sticking with this investment solution or maybe why we're proposing it is because we think that over the coming years we should easily be able to achieve that 5% target, as evidenced by what's happened historically. Now, admittedly, that last chart was essentially back-tested performance over the last 5 years, but because these are growth rates and fixed at a set rate over any given period, you can kind of flip the chart into a fairly basic forecast. Now, coming back to the main screen, I've selected 2, 5 and 7. So again, maybe we're trying to target and track, and our objective is to hit 5% a year, but I've put a tolerance either side of that. So if we don't hit that target and maybe the markets work against us, we might achieve 2% a year. And if we shoot the lights out, perhaps we'll get 7. So there's my 3 growth rates. And on the right hand side, I can now start looking at longer periods, 20, 30, 40 years. And if I click generate, it can quickly show my client that, look, if we were to grow at 5% a year for 20 years straight, at the bottom left-hand corner there, I can see that we will achieve 165%. Now, if I want to put that in pounds and pence, if I come back to this main screen, over on the right-hand side, change base to index lump sum, pop in, let's say the lump sum is 400,000, click on generate, and ultimately exactly the same chart, but in the bottom left-hand corner, percentages have been flipped to pounds and pence figures. Now, coming back to the main screen, we've also got regular savings and withdrawals. So on the right-hand side, I can mimic that scenario as well. So select regular savings withdrawals on the right-hand side. Again, performance period. I essentially want to project over 20-year period. Investment option, we're going to leave that on withdrawal because my client's got 400,000 ready to invest, or maybe has invested, and they're regularly wanting to take an income of 1750 a month. And if I click on generate, I can show my client that over a 20-year window, they shouldn't worry too much about running out of money, because if they are only wanting to take 1750 a month, even if my investment solution grew at 2% a year, it would still be worth 81,000 at the end of that term. Now, I know ultimately we're looking at the last 20 years technically on the line chart, but of course, because these are growth rates, it doesn't really matter what 20-year period you're looking at. It's essentially going to look exactly the same, hence why I'm using this as a forecast. Now, regular savings is exactly the same, but obviously in reverse. Investment option on the right-hand side, we'll just change that to savings. Initial investment on day one, perhaps it's 150,000, and my client's regularly putting in £450 a month. And if you click on generate, and again, similar to before, the system's showing me that over the next 20 years, my client will put in 258,000. And in the bottom left-hand corner, again, if my investment solution grows somewhere between 2 and 7%, they'll end up somewhere between 354,000 and 808,000. Now, if we come back to the main screen, the interesting thing here is you can blend forecast projections with kind of the ghosts of what have happened in the past. So on the left-hand side here, I've stuck with my 2, 5 and 7% growth rates, but equally I've added in the official HPI index for England. There are various indices for house price indices. You'll find them under the National Statistics tab under market indices. I've also asked to plot the historic RPI rate and also the average investment solution, i.e. the mixed investment sector, 40 to 85. And again, if I click on generate, it essentially allows me to justify why we're using the 5% growth rate. It shows me that the average investment solution over the last 20 years, which in this case would have included the dot-com crash, the credit crunch and the corona sell-off more recently, even taking all of that into account, the average investment solution in the UK net of Fund charges have achieved easily 5%. The average house price has indeed achieved just over 5%, and we ultimately want to keep our head above that red line, otherwise we'd essentially be losing money. And of course, again, in reverse, if I wanted to show that on a regular withdrawal basis, flip the option back to withdrawal, 400,000 initially invested, 1750 being taken out as an income stream, and again click on generate. And a lot of the charts you'll be able to create off the back of this data are actually quite educational. You can show clients that when we look at different periods, and particularly when we start messing around between regular savings and regular withdrawals, the performance is going to be entirely different. Beforehand, when we were looking at regular savings example, we were saving and adding investments into a pot over a long period of time, and therefore enabling myself to benefit from pound cost averaging. However, in this case, this is obviously an entirely different calculation. This is essentially over the last 20 years, I would have suffered with sequencing risk because the dot-com crash hit the moment I started withdrawing from my investment solution. And whereas before, on a regular savings, we were able to achieve well over 5%, now it's a completely different story because of that. And equally, I suppose it allows us to show clients different asset classes as well, and why invariably you always suggest to clients to invest in a bit of a mixed pot, because when something might be doing well, other things might be doing particularly bad, but if you mix them into the same pot, you'll receive less volatility and hopefully a stable level of performance against that 5% growth rate we're trying to hit. Now, of course, there's absolutely nothing stopping you building your own composite indices. What I mean by that is you can build portfolios that consist of various different indices or various different sectors that mimic the asset allocation perhaps of your portfolio. So yes, the mixed investment sector's particularly useful index to use, just simply representing an average investment solution with that level of equity content. But if you wanted to be quite specific about the thing that you were mimicking, maybe using a simple example, maybe you just simply wanted an instrument that simply tracked 50% UK and 50% US, I could quite quickly build a portfolio that tracked 50% Dow Jones or NASDAQ, maybe 50% FTSE 100 or all share. And I'd put that together. I'd call that my composite Mr. Jones portfolio. And again, it would allow me to track that performance back decades and again, educate clients and show them how these different investment solutions react and behave during different market conditions. So I hope you found that tutorial useful. As ever, if you've got any questions, feel free to open up our live chat in the bottom right hand corner and talk digitally and virtually to our help desk. On the left hand side, you've got contact us. That will give you their email address and the help desk phone number. You've also got a training and guide section as well, so you can schedule a training session with the training team, or you can open up many of the different guides we have on the system to illustrate the different features on the right hand side.